Hi guys, 29th of June, morning briefing. Last day of the week, last day of the month, last day of the quarter, last day of the first half of the year. So we'll have a quick look over some of the performance, just on the charts of how these markets have performed in that first half of the year and this second quarter in particular. We'll run over, well, it's a quick recap of yesterday's price action in what was pretty lacklustre day, I would say, much like England's performance against Belgium. Was a quiet one, but seems like today could see a bit of a pickup, although I'd be a bit wary with it being that last day of the week, month, quarter and first half of the year. Just could be some unusual price action, if anything. But data calendar, which we'll come on to as well, is probably the busiest for the week ahead. So going on to yesterday's markets, I think again oil sort of stealing the headlines into the back end of the session, having pushed higher again. You can see breaking through. Let me just bring this into picture. It's higher today, and then the yesterday's high as well. But 73.20, you can see I've got marked up on the chart, and that was from yesterday, a level from November 2014, which you can see late last night acted as a good level of support, albeit chops around now. But having pushed through there, we did come back to sort of reclaim the 73.20. So one to keep an eye on there for oil, which again pushed a bit higher. Equities, if we have a quick look over as well, yesterday actually had an update. You know, there's a couple of times post cash open when they were threatening to push a bit lower, having broken through the low that we had on Wednesday, both in S&P, Nasdaq and Dow. But having pushed on into the back end of the session, it just seems like it might be a choppy end to the back end of this week. Other than that, really the markets were relatively contained. You can see the pivot level in the euro acted as a good resistance, but it wasn't really till late in the evening that we saw it really start to come back down. The pound contained between its previous low of the morning and the S1. When we finally did get a break of the S1, not much really materialised from that. We've seen a bit of move in the currency space, particularly euro this morning, which we'll come on to briefly. But yesterday, very much a quiet day to sort of say the least. And you can see again gold contained between that pivot and S1 before late last night breaking through. Going on to some of the headlines overnight, I think if you look at your euro charts this morning, you'll see any of them. Let's have a quick look at the chart before we go on to the story. You can see big spike around sort of 3:30 in the morning. This is euro dollar. You'd obviously see it in euro pound or whatnot, depending which asset you're looking at. But the reason behind it, EU leaders strike deal on migrants, and this meeting sort of ran through till around sort of 4 o'clock, and then a Bloomberg sort of source report coming out saying they had struck a deal. And you know, if you remember from last week, a lot of the sort of the reason perhaps that euro was under a bit of pressure was coming because of this deal sort of breaking down. But late last night, a deal struck between the EU leaders, and then we had the push higher in the euro. If we lower the time frame down, I'll put it onto a 5-minute or even a 1-minute chart and just squeeze it back. You can see really the push that we had, low liquidity. Just bringing that into picture there. Didn't take too much obviously to move that market. The algo would have kicked in, algos would have kicked in, and we pushed higher. If we have a quick look over at the euro pound as well, similar story in that market pushing higher on that low liquidity in the market at that time, 3:30 in the morning. Of course not going to be doing too much, so I just bear that in mind. I see in the chat Fez had a short on the euro, and I was saying to Anthony about half an hour ago, it wouldn't be a bad time to sort of have got in and looking for this reversal on the fact that maybe this move is a bit exaggerated to the upside due to the fact that not many people were in the market at all. So while, yeah, positive story, understandably euro pushes higher off that, the DAX gapped higher as well. If you look at that as well, I wouldn't be so sure that we're going to get a sustainable push here. From a technical point of view, maybe it's a case of letting the market really tell you what's going on, and you know, breaks of any of these levels of support might be the key to looking to get short, if not already in a position. So the upside, bit of a trend following the highs from the original high of the day at 5:15. Maybe a break of that could tell you actually we are looking to continue to the upside. Dollar index, because of that, coming under pressure. Obviously, the euro, the highest weighting against within the dollar index. So dollar already today down 0.4%, but another good quarter for these markets. If we have a look over just at the euro this quarter, if I bring that into picture, you can see quite a large red candle. Obviously, nowhere near as much as we were seeing in the sort of the 2015, 2014 back end of that. But the first down quarter we have had in euro dollar since October 2016. The dollar strengthening, not just obviously against the euro, but the pound as well, which you can see has come under pressure again. First time since October 2016 that we've seen the dollar really strengthen against these pairs. Other markets on the quarter, quite a bad one for gold. You can see has come back down, now trading 12.50 or thereabouts. Really has failed every time it's come to sort of the top end of that range, and yet again come back down. I mean, look, we are, if you're looking on a very longer term chart, we are perhaps still in this sort of uptrend, but we are as well coming to the back end of that. So it'll be an interesting time around this 12.50 to see what happens from a technical point of view, where we finish, not just the week but the quarter, going to be quite interesting. I was looking as well at the equities based on the quarter. S&P, nice strong quarter. If you're just looking at that, obviously it doesn't tell the full story of the sentiment of what's going on in these markets at the moment, but another update yesterday, and I would expect, you know, all things considered, another up quarter following the first sort of blip that we had. Not the case for Nasdaq though. You can see incredibly, even though we had that big sell-off in February, early February, we managed to finish up for those 3 months, the first 3 months of the year, and actually we haven't had a down quarter since April 2016. And Nasdaq, this is not going to happen today as it continues to go strength to strength, and currently above that 7,000. Mentioned that the DAX had gapped higher this morning. We put this on a daily, well, an hourly chart. You can see having closed and then opened around here, the DAX gapping higher, which, you know, obviously I feel the main reason for that would have been the migrant talk, the deal reached, less risk. So understandably you had that push in European equities. Wouldn't be, you know, entirely convinced that it's going to be lasting. We're suddenly going to make a new high for the week. So for both the euro and the DAX, I just bear in mind just that the reason that we perhaps pushed so high is the low liquidity, and then obviously DAX sort of following suit. Bad news, however, for Deutsche Bank as it US unit fails the Fed stress test. You know, the headlines over the last few days have very much been Deutsche Bank opens its second lowest price ever. So a lot of this has been priced in for Deutsche Bank, you feel, and incredibly, you know, this tweet was, you know, not too long ago. Deutsche Bank were actually up for the day. So fella test, share price goes higher, right? Go figure. But it seems like a lot of that is priced in to the market. So I'll just be a bit cautious about expecting maybe big moves off these stories to continue. But the main one really overnight that you'll see on your charts, reason for the spike, EU leaders strike deal on migrants there for that push forward. Data wise, if I just bring in the calendar, I mentioned earlier that this week, or yesterday in particular, was relatively quiet, and today's data calendar, the busiest of the week that we've had. Coming up in, well, about 50 minutes or so, you've got the final GDP readings out of the UK. So being that it is a final reading, I wouldn't be expecting a big move as such in these markets. I think if we quickly switch back to the pound, I think it would have to come way out of line to see a decent reaction here. I'd be focusing obviously on the high of the day for a really strong number breakout of the range, and really seeing, you know, a quarter reading 0.3 or a year on year 1.4, so breaking the higher end of those ranges, and then perhaps seeing pound strengthen and continue to push on, which it has this morning. You'll notice again the big green candle from this morning, really sort of on a follow through of those positive talks out of Europe, and obviously people taking their money out of the dollar as well. I was speaking to Anthony just before he left this morning about just the end of the quarter, and there's some talk of sort of end of quarter selling of the US dollar as well. So something I would just bear in mind today. Recent trend opportunities perhaps this week as well have been to look to go short these pairs. So something to just be a bit more cautious of today going into that last day. But yeah, as I was just talking, if we do have a better than expected reading, quite an important level, the high of the day was also the low that we had on the afternoon of the 27th of Wednesday this week. So good reading, we could start to maybe get a push through there. A bad one, and you know the pivot is also a good technical level today with the initial Asian session high before that push through. Going down through the morning, we have some CPI flash data out at 10 o'clock. So again, Euro wants us to keep an eye on there. So relatively busy morning data-wise in comparison to the week that we've had. And then into the afternoon, going to be a relatively busy one. Data 1:30, along with obviously the usual opens. 2:45 as well. You've got some Chicago PMI. So the main thing I think today to be focusing on will be that data from May, the core PC price index. We know the Fed look at that as one of their sort of key readings. So we'll be having a look at that. Focus, I would say, on these data points offering the largest possible move would come from that. As well. Speakers, if we just scroll down, you have a few, but again, not really into the afternoon end of the quarter. I would expect it gets to that time maybe sort of from 3 o'clock onwards, and I imagine it will be sort of pack up your bags and call it a weekend. Of course, July the 4th, so Wednesday next week, Independence Day in the States, so you might even have some people looking to take an extra long weekend ahead of a sort of a quieter US market next week as well, as people start to travel and whatnot. Looking at the charts today, we've gone through the pound. Obviously the euro, we talked about that push through, and I'd really for this market let the technical sort of tell you what's going on. I feel a break below this level of support, and we can start to see this main move from half three disappear, or a push above the trend line from those highs, and we can perhaps look to continue this move that we've had to the upside. Aussie dollar as well, you'll notice, had a bit of a spike around that time. Really, this was just more money coming out of that dollar following the move into the euro on this positive sentiment. So not necessarily a reason behind the Australian dollar strength, more a sign of dollar weakness. So with these markets, while you may want to sort of continue that trend, definitely worth just sort of having points on the markets where you can be told almost when the move to the upside is finished. So while you have the euro higher, the pound higher, and that usual correlation of pound strength, FTSE weakness, not really in the market today. FTSE, as you see, pushing to the high, and equities in general, we saw the DAX gapped higher. You've got S&P right now on its high of the day on the R1, so I'm not necessarily saying this is going to be the point to get in long, but one just to bear in mind. We talked about cash open yesterday and the fact that we just kept failing to push lower. 2700, we did have the break. We came back to retest the previous low of the morning into the earlier afternoon before that cash open. As you can see here, offered quite a good ceiling before breaking through, and then into the end of the session yesterday, making a new high for the day, and that is continued for now. Bit messy, bit range bound. You can see this week, other than the push that we had on the sort of the beginning of Monday, now we're looking just a bit sideways, and it wouldn't be a surprise to see the high of the week at some point today coming into play in this sort of profit taking feel. If we have a look perhaps at the recent trend of this market, just looking at the last few days, if let's remove the studies, you can see we have been coming down from well, almost 2800, but I think more importantly you had this nice trend on as well, so just a pre-test of that level, bit of profit taking. You had obviously the Fed meeting as well, so I'd favour, if anything, the upside for equities all over the place today. Of course, anything can happen, comments can come out, and we've seen, you know, that already this week. But I wouldn't be too aggressive, is what I'm trying to get across, especially in the euro following that spike that we've had. Having a look over at oil again, we talked about pushing above the previous highs for the last few days. So again, you'll be focusing on that, I guess. The only reason I think you'd be a bit more cautious is due to that is the end of the week, and that lower volume ahead of next week as well for this market might just mean that yesterday's high remains the high of the week, is what I would suggest. But you can see already, technically speaking, the lows of the day just getting squeezed in, respected quite well from the low down at 2:15, then into 5:45 and 7:45. So nice respected trend line. So a break of that, and of course that could see a further push down. Volume permitting, of course. You know, it's not too high in volume for now. Yesterday's low though in oil, you can see working pretty well from the low that we had on the 27th. So technically this market has been okay when pushing to the downside, and obviously the push above the previous highs, not too bad as well. So oil for once behaving half technically, it seems. Just have a quick look over at the Dow and the Nasdaq just to sort of wrap it up from a technical point of view. We mentioned equities pushing higher, and the Dow and Nasdaq no difference. Pushing above this R1, so just bear this in mind for anyone looking at the S&P as well, as the Dow sort of extends that push. It might be that this offers a sort of a level support with the previous high to continue this move to the upside. The DAX, before we come back onto the Nasdaq, just pushing on. So the R1, yesterday's high, the level to sort of really be aware of, you know, when looking higher. The Nasdaq, along with S&P and Dow on their R1. So we've had the Dow push on, S&P looking to do the same. I'll just be focusing to see as well on the Nasdaq here if we can get that push on. Already looking perhaps where the next target could be. Might be that you prefer to wait for this to sort of happen a bit in time, the push, and then using the previous high of the day as the level support might be the way to look on. So just to go over that data calendar again, 9:30, so data coming out in a bit. You've got the 10 o'clock data as well into the afternoon, so I'd expect lunchtime to be relatively quiet. Then 1:30, 2:45 is where you're going to get the main part of the moves into the afternoon, and then I would suggest really from 3 o'clock the market's going to start to unwind, and then sort of, you know, really look to slow down ahead of the weekend into next week as well. Opportunity wise in the market, so just be a bit cautious. I wouldn't necessarily look to continue this dollar strength that we've seen unless the market really does tell you so as well. Any questions, of course, please do get them in the chat. We'll be posting some throughout the day, and of course do a bit more of a rundown ahead of the data releases coming up, so 9:30 the next one there. But if I don't speak to you guys, hope you all have a great weekend and enjoy all the football that is on.